Good morning, everyone. A very warm welcome to webinar on impact analysis of 51 GST Council's recommendations, new notifications and circulars, ITC optimization and code decisions, 19th Indirect Tax Colloquium organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. He is a qualified CA, LLM and LLB. He is the convener on indirect taxes of the CII Economic Affairs and Taxation Committee Eastern Region. He is also a visiting faculty for indirect taxes in the CII, the BCC&I, Institute of Foreign Trade, ICAI, ICMAI, and other business forums. He is the author of Tax Connect weekly bulletins and Direct Tax Vista. During the session, please turn your video and microphone off. If anyone has any queries, please write in the chat box. We will answer all your queries at the end of the session. Further, we request Samir sir to say a few words. Over to you, Samir sir.
Thank you, Titli. Good morning to everyone present here, and good morning, Vivek. As we discussed in the last colloquium regarding the 50th council meeting decisions, and we had promised that we will be back again once the notifications and circulars were issued by the CBIC. So here we are with all the impact analysis that all the notification circular and some interesting case law that we have seen in the last week, including the one that came yesterday from Calcutta High Court. It was a very welcome decision. And although it is not mentioned in the agenda, I would like Vivek to cover that as well, the Suncraft decision. And I'm sure we're going to have some interesting session down the line. So over to you, Vivek, to begin with the session. We can't hear you, Vivek.
Hello.
Yeah, no.
Audible, no? Yeah.
Yes.
Yes, sir.
So, thank you. Thank you, Samir and VILGST for partnering with us for this 19th colloquium. Thank you, Team Tax Connect, for organizing this at short notice. And thanks to all the participants for joining early in the morning on the next day of the council meeting. We promised we would come out with all the notifications and circulars whenever they come out apropos that 50th council meeting. But we did not know that along with that, we will have the GST council meeting within 1 month itself. So, as Samir said, we'll discuss on the Suncraft issue because that also is into the scheme of the agenda today to discuss on the very important aspect of ITC optimization. After GST has been invoked, there is a issue of ITC getting accumulated in some states, whereas tax payment in other states. ITC which is being denied by the department without the provision of the law. Even after this circular 183 or 193, there are certain gaps wherein taxpayers have to go to High Court, and the Suncraft decision is a very important judgment which we'll discuss here. So let me share my PPT. Moshmi, is my screen visible?
Yes, sir.
Yeah. So, first of all, we'll discuss on this a small part on this 51st GST Council meeting, while it is only one issue which was discussed over here. and the decision was taken in the last 50th council meeting. Nothing much happened, which has nothing has changed the decision of the 50th GST council meeting, but they have added on to the decision. Important is to understand that since GST is still in its nascent days, and even after 6 years, issues are being resolved, and all those who are present in this colloquium, all the participants, after 10-20 years also, we should be knowing why things have come, and how things have come. So an important thing is that on this gaming versus gambling and GST on gaming, casinos, and horse racing, this decision is not a unanimous decision of the GST Council. Delhi, Sikkim, and Goa were the three states who were not participative in the decision. Yet the GST Council has passed this decision by a majority vote. And there is a precedent to this. The same was done in case of lottery, which was laid down by the CBIC officers before the council, and therefore this GST on casinos, gaming, and horse racing was passed in the council meeting. There were two issues in this respect. First, whether gaming can be treated as similar to gambling, and the sixth entry to Schedule 3 on taxable actionable claims in the nature of lottery, betting, and gambling would apply to gaming also, which was a which was a game of skill and not a game of chance. The second issue was that in case gaming was taxable, what was the rate of taxation on gaming? Both the 50th GST Council had also decided upon that they would contest. Already the SLP has been filed against the Honorable Karnataka High Court's judgment in the case of Gamescraft Technologies. So as the Honorable Revenue Secretary had said in the last press conference, they will fight it out and let the Supreme Court decide on the matter. However, they would insert an explanation, possibly in the form of a clarification, to Schedule 3, wherein it would be explained that possibly gaming, casinos, and horse racing would be considered to have been always been excluded from Schedule 3 items, that is actionable claim in the case of gaming, casinos, and horse racing would be considered to have been always been taxable, that is from 1st of July 2017. It would have been considered to have been always been taxable. Therefore, the gaming industry, there is a lot of talk on the media already, and all of you would be aware that gaming industry has gone very aggressively on this. They have represented very aggressively before the council, but the council's decision is very clear that as per them, this was always taxable. Taxability was one of the issues, but more important was the issue on the valuation. The question was that will only the service charges in these services of gaming, casinos, and horse racing would be taxable under GST, or would it be the entire bet amount? They have further clarified this in this council meeting. Let us understand by means of an example. Say three bettors go to a casino and bet 100 each. So what do? They purchase the coins of 100 each at face value of the coins, that is on this 300 rupees, 28% GST would be leviable. That is 84 rupees would be deducted. Again, 15% of service charge along with GST would be deducted. Whatever remains, say 171, which remains after this service charge and GST on service charge. Now this 171 would go into the game, and the person who would be winning in the game, he would get 171. He has spent 100, he would get 171, of course, after deduction of TDS under Income Tax Act. We would not go into the TDS aspect as of now. One very important addition which this council meeting has clarified is that now if this winner of this bet wishes to reintroduce and rebet with this 171 rupees, then there would not be an additional GST on this 171 rupees in my example, right? This is something important which the council has clarified yesterday. So only the 100 rupees which the bettor has first introduced or first purchased the coins with, that would be taxed. Subsequent winning amounts, that would not be taxed under this entry. Subsequent rules and notifications would come, and the intention is to invoke this by 1st of October 2023. And all the state legislatures, or in fact most of the state legislatures, are aligned to pass it, because we know that to amend the CGST Act, only the Parliament's sanction is not important. 50% of the state legislatures also have to pass their amendments to SGST Acts also. One very important additional point which was clarified is regarding online gaming. Online gaming providers who are outside India, and they provide online gaming services to the taxpayers in India or to the persons in India, then these online gaming providers located outside India have to take a special GST registration, possibly in this new form 5 capital A, which has been introduced by the 50th GST Council meeting. In the case of OIDAR services, possibly by that route, they have to pay the taxes to the government. The question is that in case an online gaming provider outside India, he provides the gaming services and does not pay the GST to the government, how would the government track it? Beware such service providers was a clear communication from the GST Council. A special cell would be created in the DGGI, and this special cell would track these kind of online service providers which are not located in India, and through the Information Technology Act, their websites will be blocked for persons in India. So a lot of changes is being made for implementing these provisions, and that is why the council has spent as much as 3 years deliberating this change. Another discussion was that what about virtual digital asset? Now, possibly the press conference yesterday that would have created some confusion that virtual digital asset is also being taxed under GST. It is already a transfer of virtual digital asset is already taxed under section 115 of the Income Tax Act. As of now, virtual digital asset is not clarified as being taxed under the GST law. However, in case a payment is made by VDA for this online gaming, casinos, or horse racing, then that would also be considered as a consideration. So this is the sum and synopsis of the 51st GST Council decisions. Now, a very important part on ITC optimization. We will discuss various issues, and as Samir said, this new Calcutta High Court judgment also, along with Circular 193 also, and the High Court, Andhra Pradesh High Court's judgment in the case of Tirumala Konda plywoods. A lot of things have been coming, while which ITC can be rightfully availed and it can be optimized. First of all, Circular 199 on ISD versus cross charge. We will discuss on what this circular has provided, and then we will discuss the pointers and the implications of this circular and how it should be implemented by the taxpayers. First and foremost, there are three main parts to this circular. First issue, and I will discuss with examples for better clarity and understanding purposes. You can go through the text of the circular at your own pace. So first issue, in case of services provided to HO, which are common in nature to all the branches across the states by third parties. For example, statutory auditor providing services to all the states. Say, for example, a company has its HO in Karnataka, a branch in Maharashtra, and another branch in Haryana. The statutory auditor will raise its bill in Karnataka. Whether it has to be routed only through ISD or it can be cross-charged also. The council has clarified that both are acceptable, ISD as well as cross-charge. However, first point, can a decision be taken as to not cross-charge at all, taking shelter under second proviso to Rule 28? In this, our legal submission is this decision cannot be taken not to cross-charge at all, because it is a common services. Maharashtra and Haryana, in my example, are also the recipients of those services already. Services already happened. So it must be cross-charged, otherwise Karnataka may have a issue. Whether the value of the services can be considered to be nil or any other less value, again, in our legal submission is second proviso to Rule 28 is applicable when the HO provides the services to the branch offices and not when it cross charges the services to the branch offices. So the entire value of the service of this statutory auditor, that has to be absorbed by the three states, Karnataka, Maharashtra and Haryana. It cannot be that you only cross charge some portion of it to Maharashtra and Haryana or either of the states. You must cross charge the entire value of the services. Can you cross charge more than what the statutory auditor has charged you? Again, the HO is not the provider of the services. It is a mere cross charger. In other words, if you say it is a pure agent, it is acting as a pure agent, wherein it is cross charging the services which has been received from the statutory auditor. So our legal submission is that even a higher amount should not be cross charged to avoid litigation. The next question or issue discussed is internally generated services. For example, the CFO is sitting in Karnataka HO. He is providing services to Karnataka normal registration, Maharashtra and Haryana also. Is it mandatory to cross charge? Answer is no. Is it possible to cross charge? Answer is yes. So these kind of internally generated services, while it is not mandatory to cross charge, yet there is always an option to cross charge, right? What would be the value? Here, second provision to Rule 28 would be applicable. The value would be any value which is cross-charged by means of an invoice from the HO to the branches, right? Here, valuation would not come in the way. So, you can determine the value of the cross-charge even as nil. You can determine, say, the CFO salary is 1 crore rupees per annum. But the base value of your cross charge to the branches with GST thereon can be 2 crores also, plus GST, of course, right? So here valuation would not come in the way. What about in case your other branch office would not be able to take the input tax credit? Is it mandatory to cross charge? Answer is no. Can you cross charge to only one branch, not cross charge to another branch? In our legal submission, answer is yes. So many of the taxpayers ask us a question. For example, in case of works contractors, they ask us a question that when, say, for works contractors, they provide works contract or they get turnkey projects in one state, and initially the services provided by HO to the state where the turnkey project is received, that is much higher than what would be provided going forward, and also an advance is received from the customers during the initial days only. Is it possible to cross charge more in the initial period to these states where turnkey projects are done? In this circular, answer is yes. You can do so. The other question is, This circular talks only about HO to branch office. Would this circular also prevail in case of branch office to branch office? Our legal submission is yes. The circular should prevail, and the analogy can be applied in case a service is provided by one distinct person to another distinct person, and cross charge can happen in that position also. The next question is, would this circular or the analogy, the principles laid down in this circular and the valuation methodology as per second provision to Rule 28 be applicable to goods also as well as to related parties also? Again, our legal submission is that second provision to Rule 28 applies to goods also and related parties also. So although this circular has clarified only with respect to services provided by HO2 branch office, yet second provision to Rule 28 would apply to related parties also, that is HO and subsidiary also. It would apply to goods also and not merely services. So in case goods are provided or supplied by related parties, that is say holding and subsidiary companies, then whether the valuation can be determined in terms of second provision to Rule 28, that is the value would be deemed to be that value which is determined and provided on the invoice. Our legal submission is yes, the value would be such as would be provided on the invoice in case the ITC is available to the related party on supply of such goods. So this circular has to be read holistically, and understandings should be drawn according to the provisions of the GST law. Suncraft Energy Private Limited, Calcutta High Court. I think it has come 2 days or 3 days ago. Friends, before this, since we are on this 2A versus 3B mismatch, I would go on to this circular 193. Now, circular 193 is an extension to circular 183, which was issued in last July. So in case of financial year 17-18, 18-19, wherein there is a 2A versus 3B mismatch, circular 183 required that you take a declaration from the supplier or the chartered or cost accountant in case the value is more than 5 lakh rupees per supplier, that they have paid the taxes to the government, and 2A versus 3B issue can be resolved. Circular 193 has dealt with cases from 1st of April 2019 till 31st of December 2021, after which 162AA was notified, and you can only take the input tax credit which is available in your 2B. So this period between 1st April 2019 to 31st of December 2021 has been broken up. First piece, 1st April 2019 to 8th September 2019. When Rule 36 Sub-Rule 4 was not implemented, we will discuss with the example which is there. So, during this period, like in 17, 18, 18, 19, your 2A credit was 3 lakh. You had taken 5 lakh in your GSTR 3B. For this entire mismatch of 2 lakh rupees, you take a declaration from the supplier or chartered cost accountant, whatever the value may be, and 2A versus 3B issue would be resolved. However, from this 8th of September will be 8th of October. So from 9th of October 2019 to 31st of December 2019, where the threshold or the condition of Rule 36(4) allowed 20% incremental ITC vis-a-vis 2A. In my example, let us understand 2A value ITC available 3 lakh. You have taken in your 3B 5 lakh. Allowed as per Rule 36(4) 3,60,000. So for this 60,000 only, you can take a certificate from a supplier or cost or chartered accountant. And only 60,000 rupees worth of ITC mismatch would be resolved. Balance 1,40,000 would be litigated by the department. For financial year 2020, where the Rule 36(4) was further amended and ITC was allowed only to the extent of 10% of incremental ITC above 2A, is 60,000 further reduces to 30,000. So what can be litigated by the department? 1,70,000 rupees. For 2021, 30,000 further reduced to 15,000. So department can litigate 1,85,000 rupees worth of input tax credit for 2A versus 3B mismatch. So friends, in my example, all of these mismatches which are available apropos this Rule 36(4) that you can resolve by taking a declaration under Circular 193. What about the other mismatches which are over and above 36(4)? We have held in our various deliberations. You can go to our YouTube channel and we have deliberated on this over and over again. ITC mismatches between 2A or 2B versus 3B can only be contested by the department once it is sure that the supplier has not paid the taxes to the government. So, ITC mismatches cannot be crystallized as a demand until and unless the department has confirmed that the supplier is either non-existing or supplier has closed down his business or supplier has gone insolvent, as per press release dated May 2018 issued by the and as DY Beaton versus Union of India, Madras High Court, and as per the judgment by the Honorable Apex Court in the case of Bharti Airtel that 2A or 2B is a mere facilitation. However, books of accounts is the basis on which ITC should be taken. And the same was held by the Honorable Calcutta High Court in the case of Suncraft Energy Private Limited. So in case even for these amounts over and over above Rule 36(4),
Sir, you are not audible.
hello,
Yes, sir, audible. Now.
audible.
Okay.
So to again repeat, in case it can be proved that the supplier has paid its taxes to the government and all other conditions of section 16(2) has been fulfilled, then ITC would be available to the recipient even when there is a mismatch between 2A versus 3B. That has been held in the case of Suncraft Energy Private Limited versus Assistant Commissioner State Taxes by the Honorable Calcutta High Court. Section 17, subsection 5, clause FA has been notified with effect from 1st of October 2023. So from 1st of October 2023, ITC on expenditure made by the companies for CSR activities would not be available as it is blocked under 17(5) FA. Now, two questions arise from this, which I am giving a caveat at the very inception, may be litigated by the department, but we are submitting our legal views in this matter. The first question is, what about before 1st of October 2023? Would ITC be available on CSR expenditure? In our legal submission, the very fact that 17(5) FA has been introduced, that itself is explanatory enough that before this date, ITC for expenditure for furtherance of business in the nature of CSR activities would be available to the taxpayer, as it is mandatory by the taxpayer to do such expenditure. An analogy can be drawn from the amendment in section 37(1) of the Income Tax Act on the same issue, where it was disputed by the department that CSR expenditure would not be allowed as a deduction. All the courts has held in the favor of the taxpayers before 2014-15 financial year, when the amendment was made to section 37(1) of the Income Tax Act, and it has held that the deduction would be allowable. However, after the amendment was made in section 37(1), the courts have held against the taxpayers. Therefore, in the same way, it is our legal submission that before 1st of October 2023, ITC should be available on expenditure done for CSR purposes by the companies, as is mandated by the Companies Act 2013. Another question is, what about those CSR expenditure which is not mandated by the Companies Act 2013? Our legal submission is that if it can be proved that this CSR expenditure was for furtherance of business and all the conditions under 16(2) have been fulfilled, in that case, the ITC would continue to be available for expenditure over and above that as mandated by the Companies Act 2013. Right? Another issue in input tax credit is regarding the limitation of time period for taking input tax credit, which as of now is 30th of November of the next financial year. Earlier, it was the return filing period of September of the next financial year. Question is this time limitation of taking input tax credit constitutional or unconstitutional? Because Section 16 subsection 2 lays down 4 conditions of taking input tax credit. After now 5 conditions. So number 1, you should have the tax invoice, you should have received the goods or services, you should have filed your returns, you should have ensured that the tax is paid to the government. And after invocation of 16(2)AA, the ITC should be available in your GSTR 2B. After you fulfill these 5 conditions, now 4 conditions earlier of taking input tax credit, the question is whether you take the input tax credit after 30th of November of the next financial year, then is that valid? The Honorable Andhra Pradesh High Court, in the case of Tirumala Konda Plywoods, has held that notwithstanding which is used in 16 subsection 2 is subject to the interpretations of the courts, and notwithstanding is used only with respect to those conditions which are conflicting with that provision. However, it does not mean that the moment notwithstanding is used, provisions which are not conflicting. In the instant example 16(4), which is non-conflicting with 16(2), that cannot be invoked. And ITC is always an exemption or a concession granted by the Act. Therefore, the time period for barring input tax credit in the GST law as per 16(4) is constitutional. I can already see a question on the chat box, and I have discussed this in this PPT also. The question is whether you can take input tax credit and then reverse it before 30th of November. Then the reclamation after 30th of November of the said input tax credit, is that also barred by limitation or not? In our submission, after the amendment of section 41 and notification on 26th of December 2022 of Rule 37 capital A, it is clear that there is no time barring period for reclamation of input tax credit. After one takes the input tax credit and then reverses it because certain conditions of taking input tax credit has not been fulfilled, or after reversing it for non-payment to the vendor. Therefore, friends, for claiming ITC, there is a time barring period of 30th of November of the next year. But for reclaiming ITC, there is no time barring period as of now under the GST law. Again, an interesting case was, where the counsel himself has argued his own case that loan granted to a credit card holder that would not be subject to GST. Critical issues. Three similar kind of issues. One is clarified by circular 196, where a group company has held the shares of its subsidiary company. Would that be liable to GST? Circular 196 has clarified no. Certain field officers, I think in Karnataka, they had raised this issue. But two related issues still not clarified. Corporate guarantee given by HO, a holding company or group companies, or the subsidiary or other group companies. Is that a service? If that is a service, what would be the value? ESOPs of holding companies provided to employees of subsidiary companies. Is that a service by the holding to the subsidiary? Not audible. Am I audible, Titli?
Yes, sir. Yes, sir.
Yes, sir. Audible. So is this ESOPs of holding company provided to the employees of the subsidiary, is that a service? If yes, whether it is liable to GST or not, because it is without consideration. In our legal submission, yes, that is a service. Is that leviable to GST or not? Yes, it is leviable under Schedule 1, entry number 2. What is the value of that? Second proviso to Rule 28 would apply, which we have discussed earlier in the ISD versus cross charge issue. So friends, again, these two things of corporate guarantees as well as ESOPs, that has to be again in your companies, in your organization, these have to be re-looked at with a fresh eye. Although this holding and subsidiary shareholding, that is clarified by this circular 196. Finance Act 2023 is notified to be implemented from 1st of October 2022-23. The provisions with respect to the conditions for formation of the tribunal, they have already been implemented from 1st of August 2023. We will discuss the major changes which would be implemented from 1st of October 2023. First of all, no more discussion. No more litigation now. On high sea sale, sale during bonded warehousing, and third country export, that is export outside India from one country to other country. However, very important, friends, when you are selling the goods during the bonding period, so if your goods are warehoused in the bonded warehouse, and during that period, if you are selling the goods, while it would be not leviable to GST, yet you have to proportionately reverse input tax credit from 1st of October 2023. This is a very important amendment which all of us should note. Another important amendment for transportation of goods by mail, courier, etc., where one of the parties is outside India or both the parties are in India, whatever might be the case. Previously, the place of supply was outside India and therefore no GST was leviable. However, now the place of supply provisions under 12(8) and 39 of the IGST Act have been amended, and therefore the place of supply would be considered in India under 12(8), 39, and GST would be applicable even when the goods are traveling outside India. So please take note, and especially the transporters, they have to take note and implement these. There are other amendments. We would just go through the major ones. So for a SEZ supply, if you are supplying to an SEZ, ensure that you have got the endorsement on your invoice or a bill of export. Even if you are supplying services to SEZ, ensure that you have the endorsement on the invoice. Otherwise, they would not be considered as zero rated, because now after this amendment to section 16 of IGST Act, only services and goods supplied to recipients who are authorized to operate under in the SEZ, they would be eligible for this zero rated supply as recipients. So to substantiate this, that you are supplying only to those recipients who are authorized to operate in the SEZ, you have to get an endorsement on the invoice, or you have to get a bill of export, as the case may be. Previously, there was a blanket. Now, this is a very important amendment which may just go unnoticed. Previously, there was a blanket permission to either supply under LUT, either export under LUT, or to do on payment export. Now they have specifically amended section 16 of the IGST Act and have allowed export on payment of duty to all the suppliers of goods other than pan masala, menthol oil, etc. So very important going forward, possibly because the government sees that export of goods on payment of duty, that is a risk to the exchequer. So more and more such goods or services might come wherein export of supplies with on payment of duty may be restricted. Okay, so e-commerce operators, the suppliers who are registered on e-commerce operators portal, now subject to certain conditions, they can be unregistered also, but they have to get an enrollment number based on their PAN, and they can go for composite scheme also, subject to conditions, right? Uh, Decriminalization, certain offenses have been decriminalized under section 122. Those were subjective offenses. Actually, you can go through our YouTube channel. I have discussed this decriminalization specifically in a video. Director services, there are three kinds of services or four kinds of services which directors render to companies. Number one, services for attending board meeting where they are getting sitting fees as directors, non-executive directors I'm talking about. Second, services as directors where they are getting a commission on sales. Third, services as consultants, independent, private, personal services. Fourth, services wherein they are letting out their residential property to the company. And of course, one more is there by the whole-time directors who are employees. So services of an employee. So these four services has been clarified now, and earlier right in the circular 140 of 2022, now it is clarified under circular 201 of 2023. First, when the director is getting sitting fees, then the company has to pay under RCM, under serial number 6 of notification 13/2017 CGST rate. Next, in case the director is getting a commission on sales as a directors within the limits of Companies Act 2013, again company has to pay under RCM. Third, in case the director is providing consultancy in his personal or private capacity, then director has to charge under forward charge mechanism. Fourth, in case director is providing his residential property, then before July 2022, it was exempt. After July 2022, company has to pay under RCM. I have clarified in very crisp terms. These are the four conditions. So one taxpayer asked me after this was passed in the 50th council meeting, now what about a case where the company has not paid where it should have paid under RCM, or the director has not paid where it should have paid under forward charge mechanism? Can it be considered to be as a revenue neutral transaction? Our legal submission is no. Please regularize this. Otherwise, this would be subject to litigation. Right? So this is by and large the director's part. Crisply. Warranties. You can go through our YouTube channel. We have discussed this in detail. this warranties part. However, just a brief synopsis. Now, this is a code in itself. This circular 195 on warranties specifically, and all companies, mobile companies, the electronics, electricals companies, automobile companies, automobile spares companies, etc., all would be impacted by this circular on warranties. So there are three processes of providing warranty goods. First, we will take the example of a mobile phone. So a mobile phone is on warranty. The customer goes to the dealer. The dealer makes a claim to the OEM. The OEM sanctions the warranty. The dealer provides the warranty mobile phone or the spare part free of cost to the customer, and raises an invoice on the OEM. OEM takes the input tax credit and makes the payment to the dealer or the distributor. Second process, wherein the distributor, you see, makes his makes the supply free of cost to the customer during warranty period, and the OEM replenishes the stock to the distributor. Third, the distributor provides the warranty goods free of cost to the customer, and distributor raises a credit note on the OEM. It has been clarified by Circular 195 of 2023 that principally there should be no GST on this warranty supplies, either by the distributor to the customer or by the OEM to the distributor. There is no requirement of reversal of ITC either by the distributor or by the OEM. So principally this circular is very clear. However, the circular talks about, while it starts with the fact that industry has represented and we have represented on the same, what about when the whole mobile phone is given? Yet they have clarified on the parts. But the same analogy would be applicable on the goods also. Because principally the circular is very clear, there is no GST on warranty supplies. Again, the question is that whether the warranty supply or this exemption is qua goods or qua the expenditure. I would explain this in little more. So when the distributor provides the customer free of cost, this warranty supply, is it mandatory that the OEM should supply the stock to the distributor and that same goods is supplied by the distributor to the customer? Answer is no. This circular is not qua goods. However, the council should clarify this going further. Circular, in case even if certain field formation takes a different view, Circular 195 is very clear. Para 1 and 2, point 1 and 2 of the circular are very clear. No GST on warranty or no reversal of input tax credit on warranty supplies, and the principle should remain. It is not qua goods, it is qua the warranty expenditure. A very important circular again, 192. So there are certain restrictions on the portal which are not as per the GST law, and now circular has to be issued because of interpretations of field officers sometimes. So what happens? You take input tax credit of IGST. However, IGST is utilized first due to a restriction or the way the GST portal functions, and CGST and SGST balance of input tax credit remains. The question is whether interest would be applicable or not. Circular 192 has clarified interest would not be applicable. We will circulate this PPT. You can go through this. I have explained with an example. Also, you can go on the VILGST website. We have our article on that in this respect, clarifying with numericals. F&B service in cinema halls, whether taxable at 28% or 5%. All of us watch movies. Two ways by which we can buy a popcorn while going to a movie. And I will give you a third way also, which has not been clarified in this circular number 201 of 23. So first way, you buy the ticket for say 1000 rupees and they will give you an offer, buy popcorn also at 50 rupees. However, second option is you buy movie ticket only at 1000 rupees. This popcorn, if you want, you can go and buy at the hall at 100 rupees. So naturally, if you buy with the ticket, there is a inbuilt discount on the popcorn. So the question was that this 50 rupees, which is charged additionally with the ticket, whether this 50 rupees charged for the popcorn would be 5% under restaurant service or 28% under cinematography service. GST Council has said that if you buy the popcorn with the ticket and it is a composite supply, 28% as cinematography. If you do not buy it with the ticket, if you buy it in the hall, then restaurant service 5%. Now, my question, I buy the ticket and the ticket value is say 1025 and it gives me a coupon wherein with that coupon I can buy the popcorn for 25 rupees only, right? So I am charging only a part of the value in my ticket and giving a discount coupon. The question is whether this 25 rupees which I am charging additionally, is this actionable claim, not leviable to GST? Is this cinematography leviable at 28%? Is it F&B leviable at 5%? I will leave you with this question on this subject. GST refund, certain clarifications on circular 197. So there was one thing where GSTR 2B, in case ITC is reflected in the earlier period, certain field officers were denying the input tax credit. Now that has been clarified that the refund would be eligible on the accumulated balance of GSTR 3B or 2B in this period. Section 16(2)(c), that is the payment of tax to the government, is mandatory before claiming the refund. However, if under 37A rule, you claim the refund after the amendment of section 41, afterwards, if it is seen that tax has not been paid to the government, you have to refund with interest. Question is will there be two interests applicable, one for reversal of ITC, one for additional claim of refund? Again, I will leave you with this question. In our view, interest should be applicable only once on the same transaction. Dual times interest should not be applicable. There were certain field officers where you all know refund is provided on the FOB value of export. So what field officers were doing were they were taking in the denominator FOB value, but in the numerator they were taking CIF value of exports, thereby reducing the value of the export refund claim. Now they have clarified that even in the denominator you have to take FOB value. The question is, where in the GST law has it been mentioned that refund has to be provided on FOB value, when the valuation rules under section 15 provide that GST is payable on CIF value? Again, that is something which is with the council for the council to decide. In case you do not get the money for export of services within 1 year and you do not supply the goods within 3 months, you have to reverse the refund. However, if you get the money afterwards, or if you make the export afterwards, you can reclaim back the refunds, but the interest lapses. So these were the clarifications with respect to refunds. E-commerce operators back to back. Buyer goes to e-commerce operator A, e-commerce operator A goes to e-commerce operator B, e-commerce operator B goes to supplier. TCS would be collected by both. E-commerce operators are only one. They have clarified that TCS would be collected only by the e-commerce operator B in my example, that is supplier side e-commerce operator, in case he is not the supplier of the goods. In case supplier side e-commerce operator is also supplier of the goods, then buyer side e-commerce operator would collect the TCS. Circular 194 has clarified. Very important, again, something which would skip many people's eye is this circular 198. So if you are supplying to army, if you are supplying to railways or other government departments, food supplies department, so many other government department, right? And the government departments, you know, they have only the GST TDS number. They do not have a normal GST number. Should you provide an e-invoice on the GST TDS number or no? Would it be considered B2C? Answer is no. It would not be considered as B2C. You have to provide an e-invoice on the GST TDS number of the government department. Other notifications, very important one, unprecedented and out of the box notification. So now this taxpayer BSH household appliances based out of Bangalore. It has its offices everywhere. It has got notices from Maharashtra, Chennai, as well as Karnataka. From the CGST department, notification 35 provides that all these three notices, even of Maharashtra and Tamil Nadu, may be adjudicated by Bangalore CGST department. Friends, this is a landmark notification, I would say, because this clarifies the intention of at least CBIC that they are ready to provide a common pan India adjudicator, right? This benefit can be taken by the large taxpayers where there are notices on the same issue in different states. We have been representing before the council in this respect with this notification. I think the process has started, and for many cases under investigation or adjudication with the DGGI or with the ad, commissionerates, now taxpayer wise, they can be granted a common adjudicator. However, whether the state governments would agree to this or not is something which needs no answer, because it would somewhere dilute the federal principle embedded under GST. Another question is, in case of a demand in this scenario by the adjudicator in Karnataka, the appeal would lie to which appellate authority? Would it be state-wise, or again would it be only to the Karnataka appellate authority? These questions have to be answered, but as of now, a new, completely new process has been started under GST. Transitional matters, you could have filed a claim for transitional credit during the special dispensation window in September, October 2023. Now, even after the special dispensations, various show cause notices have flown, where the show cause notices were manual, orders were manual, and the question was how to file an appeal against the orders. Now they have clarified that appeal can be filed manually. But APL02 acknowledgement needs to be taken, because that APL02 acknowledgement would be considered to be the date of filing of the appeal. No pre-deposit is required in these cases. For those who have filed an appeal already manually against these orders, they need not file another appeal, but they need to take the APL02 acknowledgement. Pan masala, gutka, tobacco products, completely new procedures under GST. They have to declare on the capacity of the machines. If they install new machines, they have to declare it in a separate form 2A. If they dispose of a machine, again new form. Monthly statements for production, daily statements of production need to be maintained, and monthly returns in SRM 4 needs to be filed by the tobacco products, gutka, pan masala, and all these taxpayers. So they have to completely change their processes going forward. Consent-based sharing of information, account aggregators of NBFCs, the consent-based sharing of information now is applicable for account aggregators. You can go through this PPT. Also, our article is available on VILGST. You can go through that. Rate notifications for GTA. This is important. For GTA, now there is no requirement of selecting the option of FCM or RCM every year. Once a GTA selects FCM, then it would prevail until he reverses back to a RCM. If he wants to reverse back, then from January to March of that financial year, he can reverse for the next financial year. However, important is for all the GTAs, on your invoice, you have to change your declaration. If you can see the screen, the last line highlighted in maroon, the declaration on the invoice of the GTAs, they have to change that, right? So if they have already chosen FCM, and that will continue, they have to declare or change the declaration that from the financial year so and so, the services are provided under FCM and have not reverted to RCM, right? So slight change in declaration is important. Other rate notification, aggregation, fuming fumigation services, agriculture's fumigation services in warehouse, they are 5% tax. Amnesty schemes for filing 9, etc., they have been extended further till August 2023. So friends, I think this is it. So many notifications have come. I have not discussed many of the rate notifications and some other notifications which you can go through at your own pace. We would take certain questions in the chat box now. Cannot. Just a moment. Some problem with my chat box. Yeah. So CGST amendment require only Parliament nod. SGST being 50% levy, its amendment need nod of state legislature. Yes, but the enactment or notification, it will be notified only once 50% of the state legislatures provide an assent to the SGST amendments. Mr. Manoj says 1st April 2019 to 8th of October 2019 for 100% ITC. Yes. Mr. Ashish Singh, what are the time limit for taking input tax credit against the temporary reversal in GSTR 3B? As I said, there is no time limit for this, for reclamation of the input tax credit. Mr. Ramanujam says, is there any doubt on the availability of credit on books or to be? Can we avail the credit and reverse it in the same month within the statutory time period? And can it be retaken at any time after reconciliation, matching later? Yes. As we have discussed, there is no time limit for reclaiming the input tax credit. Can you please share the PPT? Yes, PPT would be available. If an activity of investment in subsidiary is not a supply under CGST Act, can the company claim ITC on input service, consultancy charges, etc. incurred in connection with the same? No. In case the said activity is not liable to GST, then even the input tax credit cannot be claimed under Rule 42. Mr. Rajesh Mangal says, as you correctly said, that ITC can be reclaimed for earlier 180 days reversal, but whether the same can be applicable for all reversals. Please share the citation any. As I said, Rule 37A that allows this reversal and reclamation even after this second proviso to 16 subsection 2 that allows reclamation without a discussion on the time barring period or without the restriction of the time barring period, right? Mr. Prakash Naik says whether common input tax credit received from third party by HO is compulsorily required to be cross-charged to all the states where we are having place of business with any valuation method. Yes, as I said, Mr. Naik, it is compulsory to either route it through ISD or cross charge because the common input tax credit is related to all your registrations. Mr. Ashish Singh says, what we are importing goods free of cost from China under warranty replacement. In case customs charge IGST while clearing the material, how the IGST can be claimed? We have to supply the material to our customer free of charge under warranty replacement. Can we, okay, we'll read all his questions. Can we claim IGST input or we have to claim IGST refund from the authority? Right. So very good question, Mr. Singh. Uh, Input, if the customs is charging the IGST, then the input tax credit can very well be claimed by you. Now, the question is that whether refund can be claimed or not, that requires to be seen. In this case, prima facie, I can tell you where a GST is being charged by the GST authorities or the customs authorities without the authority of the law, then the refund should be applicable in case you have not passed on the charge of the GST to another person. So, subject to unjust enrichment, prima facie, my view in this case is refund should be available. Mr. Ramanujam says, can we take in case of high C sale, no reversal of ITC apply in terms of Schedule 3, and in case of bond sale, reversal of ITC applicable from 1st of October 23? Yes. High C sale, no reversal of ITC required, but bond sale, reversal of ITC is required from 1st of October 2023. Related to ESOP query, whether there is any furtherance of business in the interest of the company, they will give ESOP to employees as per Schedule 1. Also provided same analogy, supply of goods or services or both between related parties or between distinct persons as specified in section 25 when made in the course of furtherance of the business. Please clarify the same. So related to ESOP, so you will mean to say whether it is a service or not. Yes. So as I said, yes, it is a service from the holding to the subsidiary company, but from the subsidiary to the employees, that becomes a perquisite to the employees, that is outside GST under Schedule 3. But from the holding to the subsidiary company, that is a service under Schedule 1. Now, what is the valuation? That has to be decided under second provision to Rule 28. For authorized operations by authorized operator, yes. Whether third-party services received by HO, which are later invoiced to BO under Section 31 of the CGST Act, as per recent Circular 199, to be treated as supply to SEZ for authorized operations. Yes, of course, it is to be zero rated. Sir, you have indicated in bond sales will attract reversal of ITC. Will it also apply to sales made within the FTWZ space? Okay, so within FTWZ from one to the other, you are selling the goods. Prima facie, I can say it would not attack the GST because it is considered to be outside the taxable territory of India. It is not a normal customs bonded warehouse. But yes, this needs to be further looked into. PPT would share, okay, whether Mr. Ashish Singh says whether HSN and percentage wise clarification is mandatory while filing annual return. See, this you have to see in the notification notifying GSTR 9 whether this table for HSN is and this percent-wide clarification, this is mandatory or not. Uh, you have to see the notification. Offhand, I would not be able to comment on this. Mr. Shrikant says we have to disclose in GSTR 1 return FOB value or CIF value. Of course, CIF value, not FOB value. Post 18 July 22, if a director registered under GST law provides residential dwelling to the company on rental basis, who will pay the tax? Director under FCM or company under RCM? Of course, company under RCM. That is already uh, clarified now and notified under 5AA of notification 13/2017 CGST rate. Mr. Patel says we have one sitting arrangement at various part of India as per regional office and sales and purchase office are not happening at respective sales value. All purchase and sale are from Maharashtra. In this case also, do we need to raise an invoice as all sales office for common services? If yes, what will be the basis? Yes, Mr. Patel. For common services, yes. Internally generated services, you may or may not raise. But common services, yes. I would say you should be raising a bill, right? Because common services, that services is not only for the HO in Maharashtra, it is for all the branch offices. The basis that you need to take either turnover or any other reasonable basis. Mr. Shonik Mukherjee says whether it is mandatory to distribute common inputs, third-party service to branch offices uniformly under cross-charge method, can we distribute common inputs to select BOs also? Yes, if it is applicable, if common inputs are applicable to select branch offices, of course, why not? Okay, CSR, where in case of receipt of goods at directly at CSR's location, in that case, do we claim input tax credit? Yes, of course. Before 1st of October 2023, ITC for goods as well as services in case of CSR expenditure is eligible in our submission. However, I have already given a caveat. This might be litigated by the department, but the precedents are clearly in your favor in income tax case, where only after the date of the notification of the restriction, the input tax credit can be denied. Before that date, if it is for furtherance of business, which in our submission it is, input tax credit cannot be denied. Recording of the webinar is available, would be available on VILGST homepage. Very soon it would be available on our YouTube channel also. Please clarify, if we discard ISD registration and do business of corporate under normal registration, is that okay? Yes. After this circular 199, it is perfectly fine. What value should be considered for cross-charging third-party invoices if recipient cannot avail the input tax credit? Again, the valuation would be guided by Rule 42, right? In this case, in our submission, it would not be guided by second proviso to Rule 28, right? So in case there is a one-to-one correlation, then that value would go. In case there is no one-to-one correlation, it is a common thing, then it would be in the ratio of the sales. Mr. Shaw, what is the time limit of claiming ITC for 22-23? It is 30th of November 23. whether common input services received from third party by HO is compulsory required to be cross-charged to all the states where we have place of business. Yes, in my opinion, yes. Can we claim CSR ITC till 1st October 23? As I have said, again I am saying yes. In my opinion, yes. Post 18th July 22, if a director registered under GST law provides residential dwelling to the company on rental basis, who will pay the tax? Director under FCM or company under RCM? If he is not registered, then implications. Company under RCM. What is the value to be taken for reversal of ITC on bonded supplies? So the value of the supply, in case there is a bonded sale, then of course there would be a value attached to the say supply. That value would be taken. Time of recredit unlimited for ITC reversal payment under 180 days, or there is no limit to reverse ITC. As I said, no limit to reclaim ITC after reversal. Okay, this is the same question again and again. Okay, in case of an employee service cross charge, whether an invoice can be raised to a unit located in SEZ under LUT and then claiming exemption from IGST, since this is within the distinct person, whether the exemption is allowed, and whether exemption is allowed in case of such service is not available to the authorized operations category. Yes, not exemption. It is a zero rated supply and refund would be eligible in this case. Can you throw light on 16.4 of the CGST Act, where it has been mentioned that provided that the registered person should be entitled for financial year 17-18, what should be the argument of the dealers where the suppliers have uploaded GSTR1 after March 2019 but have paid taxes due to the government? Government cannot ask the recipient to reverse the tax where suppliers have already paid the tax. We have contested this case, and already the government has accepted our argument. There is no restriction on availment of input tax credit in case the supplier uploads his invoice after March 2019 for the period of 17-18. The restriction is only on claiming the input tax credit under section 16 subsection 4. This is very clear from section 16.4 itself, right? And you can contest on 16.4 itself. We have contested, and already the various state governments, central jurisdictions have accepted this contention. So in this case, we are very, very clear. There is the contention of the department is not as per the act itself. Can we opt for different valuation method for distribution of common input tax credit for different branch offices? Would be litigative. I would not say it should be done. Okay, Mr. Singh, I have already clarified your query. Okay, we are affecting pharmaceutical exports under LUT. Any effect of the new amendment, or we can continue the same? Continue the same. There is no restriction or further leeway. But in case your field officer has taken in the denominator the CIF value, now he has to take it the FOB value in the denominator of the formula under 89.4. Right? So your refunds would increase, but whatever you have accepted and admitted, in case, even in case you have got a less refund, then that would not be, cannot be litigated taking the shelter of this new circular, right? Also, in case you have not exported after 3 months, right? And after 3 months, if you have exported and the field officer has denied the export, you can now take shelter under this circular. So this circular is only enabling, there is no further restriction. Mr. Rajesh says, see the common received service received by the HO to be distributed by way of ISD and cross charge to be charged only in case of supply of service by HO to the branches. Your question is not clear, Mr. Rajesh. Okay, last, I think Mr. Surya will take this last question. The council during 50th council meeting clarified ISD would be mandatory. So how beneficial would it be for the company shifting its current practice? No. So the council, I am aware, yes. In the press release, the council said that going forward, possibly the ISD would be mandatory. That is how the press release was worded. However, this circular which has come 199, that is a little different and very, very clear that both for current period as well as future period, both cross charge as well as ISD would be eligible. So if you want to continue with ISD, you can do so. If you want to do only cross charge, that is also acceptable. So friends, I think we have answered all the questions. Okay, one more last we'll take. Can we opt different valuation method for distribution of common inputs for different branch offices? Well, again, I would distinguish the two. Do not opt for different valuation method for common input services, but for internally generated services, there can be a different valuation method, because then second proviso to 28, that would be available in toto, right? So just do a small, because you see a lot of structuring needs to be done, taking into account the intent of a circular. The intent does not seem that even in case of common services you can do whatever you want to. The intent is only to enable that ISD versus cross charge both you can do for common services. Yes, for internally generated circulars, the services, they are very clear. You can do whatever, you can take whatever valuation you feel like. Thank you very much, friends, for joining. We would come very soon with our next colloquium. Thank you very much. Over to you, Samir, closing remarks.
Thank you, Vivek. Thank you so much for taking us through with this in detail analysis of all the notifications, circulars, and all the issues that that happened over the last one and a half week. Uh, I'm sure you have been able to. We have been able to address most of the queries that came to us, and I hope all the participants are satisfied with all the no, replies that we managed to give. And we look forward to the next session when we have other developments happening in GST. So with this, we close this webinar, and thank you for joining, and have a nice day.
Thank you, Vivek sir, for this wonderful deliberation. Thank you, Samir sir, for coordinating with us. And thanks to all the participants for attending the webinar. We conduct such webinars every month, and we look forward to you in the upcoming webinars as well. We will share shortly the PPT and video link with all of you. Thank you.
Thank you.